Good afternoon and welcome to this session on using a swing trading style to capture short-term moves. Today is Thursday, September 29th, 2011. Thank you for joining us today. This is Darrell, your host. In just a moment, we'll be joined by Darrell Jobman, a senior analyst for TraderPlanet.com. The information conveyed in today's presentation is for informational purposes only. It is not a recommendation to buy or sell any trading instrument, and the opinions given by our presenter may change without notice at any time. Please also be aware that trading involves substantial risk of loss and therefore may not be suitable for all investors, and past performance is not indicative of future results. This webinar is being recorded, and we will be able to review the material again at your convenience. If you're new to attending Trader Planet Webcast, you'll be pleased to know that we have previously recorded sessions on our site at www.TraderPlanet.com. As an interactive event, Darrell will invite your questions at the conclusion of his lecture. Your questions let Darrell know if he's been effective with the discussion and helps as he prepares your presentation, so we hope you'll help him out by sending in some great questions. Simply type your questions within the Q&A frame on the lower right-hand corner of your screen, and we'll stage the questions for Darrell. As one of our more revered market analysts, Darrell Jobman trades his own personal account and has been involved in the financial markets for over 40 years. A decorated Vietnam War veteran, he was a newspaper farm editor and editor of several agricultural publications before becoming an editor of Futures magazine for more than 15 years. He has written and edited more than a dozen books and courses on trading. Darrell enjoys helping others succeed by teaching the do's and don'ts of trading, so if you're in need of his help, you'll benefit from his editorial on TraderPlanet.com. It's now my pleasure to introduce the senior analyst for TraderPlanet.com and our good friend, Darrell Jobman.
Thank you, Darrell. Thank you for that introduction. Kind of a gloomy day up here in Wisconsin where we're at, but hopefully your trading day is a lot brighter than what the weather looks like on the outside. We're getting into fall, so I guess it's about time we're having that kind of weather. A couple of things first on the housekeeping nature to kind of get into the session today. We are going to be using Vantage Point intermarket analysis charts when we get to that point. You also may want to put your computer on full screen mode so you'll be able to see some of the chart points a little more clearly. And then also our sponsor, Wassendorf & Associates. They are the publishers of SFO, the online digital magazine. Lots of good information between the Wassendorf publications and things that they offer and TraderPlanet.com. So you might want to check both of them if you're looking for education information. Well, today we're going to be talking about a subject that bore a little bit more in theory because, unfortunately, when I made the schedule out, I anticipated maybe a little bit better types of conditions, but we have some pretty kind of choppy markets, but not so choppy that they're nice enough to be a good swing trading model. So we talk a little bit more theory. We'll try to pick up some examples and then what to do with them. Of course, now we know I'm looking here at this lighthouse out here. It's not our lighthouse. We have a lighthouse about a few hundred yards away from where I'm trading. A few days ago, we had some very windy conditions, very rough, you know, and the waves crashing in. Well, that kind of reminds me of markets where they make these volatile moves, and what happens when you get the white caps that crash on shore, and you know, when you try to travel on the lake in those conditions, not so safe, and when you try to trade in those kind of conditions, not so safe either sometimes. Well, what are we dealing with? We got a lot of talk. A lot of these things are things that we cannot do anything about, but they get a lot of play. They have a lot of sentiment that is driving markets, you know, from day to day, side to side, almost kind of without any real good patterns. But first of all, of course, we have the global recession type of thing. We have all kinds of forecasts suggesting the economic growth is declining. It's not just the U.S., but it's a lot of other areas of the world. A lot of forecasts even that we are going to return to that 2008-2009 global collapse type conditions in many markets. And in some of the, of course, the more dire forecasts are talking about a much worse situation because the debt problems of a few years ago have escalated and have not been resolved. We have jobs and housing not solved, and we have a lot of issues there that are being discussed, you know, on the highest levels in Congress, and you know, who can get the jobs we've had the various stimulation efforts. We've had QE1, we've had QE2, cash for clunkers. We have programs for home buyers, and yet the prospects continue to look bleak. So what's going to be the solution to that? Where are the jobs? Will housing bounce back? Complicating that whole scenario in the United States is what's going on in Europe. We get numerous reports out of Europe about the mess that most of these nations are in when it comes to debt and threats of default and so forth. Occasionally we get some good news types of things, or good news as you might want to look at it from a standpoint of the market standpoint, that the governments will back up the default issues that are happening in Greece and elsewhere, and it kind of averts the panic for a few days. But then always the question is, well, the debt's still there. How are they going to resolve the problem? It's still a mess. And if Greece gets a bailout rescue, what about Italy? What about the other countries in the southern tier of Europe? You have banks that supposedly are threatened with, on the fringe of folding. A lot of kind of dire news out there in that situation. Now, if you go to TraderPlanet.com, you'll see that Trader Ed is a little more optimistic than I am, but I don't know whether it's right to be a little bit on the pessimistic side, but I prefer to think it's looking at some of the realistic issues facing anything to do with debt. It's hard to get out of that type of problem. And as a result of all those issues that are going on, you see that stocks are gyrating up and down. You get a piece of news. First is investor sentiment shifts to the plus side, and then the Dow may be up a couple of hundred points, and then the next day it's down a few hundred points when something doesn't happen, and it's just kind of back and forth. A tricky time to trade stocks with any strategy, no matter whether it's swing trading or some other. Commodities, similar type of volatility. They're had their hyperbolic or parabolic moves as the risk on, risk off type of thinking seems to pervade the markets. You hardly need to talk very much about some of those markets that are going crazy, but they're providing many challenges for traders. And it seems to be kind of a popular thing for polarization on so many different fronts, not only between the Democrats and the Republicans in the United States when it comes to arriving at a federal budget or a debt ceiling or anything related to taxes and spending, but also to the financial regulations that people are trying to come up with to guide how trading is done in the over-the-counter market and the other markets around the world, and try to come up with some kind of a framework that will work. And so far, everybody is kind of on one side of the fence or the other without anything being resolved. Then you've got environmental policies, you've got solutions, bailout types of solutions, all kinds of friction going back and forth, so a lot of polarization between different parties. And you can't solve one problem without bringing up a unintended consequence of some other problem, no matter what it is. And all this is reflected in what's happening with the currency issues. Now, what's the real value of the U.S. dollar, the euro, or the other key currencies? Is the dollar going to rise, as some think, and almost everything else sink? Will the dollar remain the world's reserve currencies? Lots of currency issues going on, and that's kind of at the center of a lot of the turmoil that goes on because of the various changes in prices as reflected by the pricing in the U.S. dollar. Now, we might have some of our